Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Lovely day out there. A couple blocks down from my store is this pier right here, about 63 degrees, cool and sunny. This is what I love about South Florida. Well, going to be a real quick report today. Not much happening in metals markets, kind of like sideways training or sideways. And I want to get into this comment right here that I read, probably one of the most astute comments I've seen all week. What is remarkable is how many people are surprised by what is going on in the market. And I'm talking about the stock market, the equity market, the bond market. You throw $20 trillion stimulus at it, you nationalize the bond market, you break all links between price and fundamentals, and what do you think happens? Well, folks, I agree with that 100%. We're living in a kind of clown world, in my opinion, and it's not too far off from this, I believe, that we're going to see a stock market crash at some point. It's just, there's no fundamentals. It's just like a big casino where someone's handing out tons of money for people to play at this casino for free. I guess the brokers get rich, but I think the country is going to be broken, and the market is going to be even more broken because of it. So let's move along to, besides that statement, and I think that we are going to have big issues. If we do have a big issue with the stock market, we have a huge stock market crash like we did in 2008. Listen, gold and silver are going to get whacked really hard as well. People will sell off everything they can to cover hedge or margin calls, and they'll sell off their gold and silver positions. I've seen it happen in 2008 when the stock market took that giant crash. The gold and silver had tumbled dramatically, almost in half in a matter of a couple days. But the issue there was that, and again, that's going to happen likely if we see a stock market crash. Do not sell. Hold, hold, hold. In fact, if you're able to buy, and I'm thinking it's going to be highly unlikely that you're going to be able to buy any kind of physical metals at those levels, because as soon as the prices drop, physical stops following the prices of the paper market. So when I saw that 2008, I remember clearly when that stock market crashed that day. It was, and I think it unrolled over a couple days, but metals got whacked really bad. Silver fell like 40%. I think gold fell almost in half. No, not half, but I went from 1,200 down to like 750, 800. But the problem is that you couldn't find any gold at that time. All of a sudden, everything dried up. And it wasn't because dealers weren't selling it. It's just because there was none available to the dealers. There was no silver out there. And if a dealer has so much in stock, like for us, example, if the prices get whacked really hard, and I've got silver in stock, and I'm in it at, say, $25 per ounce. What I always do when we sell our silver for $25 an ounce, we go replace it. So we replace our inventory. Now, all of a sudden, if I can't replace my inventory, what am I going to do? I can't sell into that down market unless I'm able to replace it for the same price per ounce. Otherwise, I'm really screwed as a business person. So you can see where that goes. That's going to go into, all of a sudden, the premiums are going to be super high on metals again. Availability of metal is going to be really tough. And speaking of availability, we're not even at that situation right now, and gold is getting tougher to find. There's a lot of delays on gold and silver product, particularly 1 ounce products and mostly generic products. But very odd, because again, we're not at a point where the markets are doing anything crazy in gold and silver, and we'll get to that in just a moment. Let's take a look. So, clowns to the left of me, jokers to the right. Here I am stuck in the middle with you. And I'm sure you all feel the same way with the way things have been happening over the last 4 years, and particularly over the last year. I feel that way exactly. We are living in a clown world for sure. I want to talk about something called rangebound trading, because that's what I think gold and silver has been doing for quite some time now, or of late. It's kind of been a rangebound area. What is rangebound trading? By the way, Investopedia, love it. Don't like Wikipedia for anything that has to do with investments, because they put their political slant into it. I like Investopedia. They say it straight up, just like it is. What is rangebound trading? Rangebound trading is a trading strategy that seeks to identify and capitalize on stocks trading in price channels. And I kind of think that we've been trading in a price channel for quite some time with gold and silver. And after finding major support and resistance level and connecting them with horizontal trend lines, a trader can buy a security at a lower trend line support, bottom of the channel, and sell it at upper trend line support, top of the channel. Well, I think it's pretty easy to say. I'm going to take a look at the chart here, but I think we can say that we've been range-bound in precious metals for a little while now, and I think that's kind of what we're seeing happening. We're seeing the institutions doing this range-bound trading. Let me move over here, and this is what it looks like on a chart. You're buying at these points, and basically it's buying the dips, you know, what we've been talking about. When gold goes down, silver goes down, buy the frickin' dips. But it's more of a day trading, or more of a more active trading base, where we're buying the dips and we're holding medium long term. When you do this kind of trading strategy, you're basically you're almost a day trader to some degree. You're buying at the dips, buy at these points with a conservative target, and then you're selling short at these points with a conservative target, and you're making that little money in between. And again, I think that's what we've been seeing with gold and silver. The institutions are range-bound trading right now, in my opinion. Let's take a look at the gold chart here too. I like this Kitco chart, by the way. It is listed in kilos, but no less. I want to look at the one-day chart, and this is from yesterday, obviously. We're down from 1856 down to 1844, so basically down about 12 bucks. It looks like it was a little lower in the morning here. Again, of course, it looks like the London markets, or the early morning markets, where metals usually kind of get trashed a little bit. Let's see what happens in New York. But again, I think we are range bound. Just for fun, let's take a look at this chart, though. Last 10 minutes. I'm going to go right down the line. Here we go. Last 10 minutes, 1 hour. Not going to be too boring to do it that way. Let's look at the 1 week chart. 1 week chart is, what was the high? 1870 and 1850. I think if I look at the 1 month chart, no, hold on a second. There's something that you could say kind of like a range-bound trading. It's selling at these peaks, buying at these lows, selling at these peaks. But at some point, you're going to get one of these when you buy at the low, or when you buy at the high, or something like this, and then you see one of these. Or you're selling into a market, like right up here or something like that, and then you start to see this. Your range-bound trading is pretty much done for at that point. Let's you know what's really cool is look at this 30-year chart. Again, nothing to do with what we're talking about, but I thought this is really cool. 1992 to 2004. I remember this market really well too. This is when 2001, I think you can officially say, when that first bull market started. Not the 1980s, but the 2000s, the 2011, 2012 bull market. I think you can officially say it started in 2001, and look at the length of time it took to complete to its high. Well, here we are. It looks like a teacup formation there as well. Here we are right here right now. And we're seeing some lulls in the prices, slightly down, and that's probably the handle for the cup as well, what they call the classic teacup pattern. And I think we are going to rocket past this 2,000 range. I'm conservatively estimating that I think we're going to see our next range-bound gold price is going to be in that $2,500 range. But you know what? That was my prediction years ago. With what's going on and the amount of money printing and the amount of craziness out there, it could be much higher than 2,500. And I am just blown away that silver hasn't blown past that $50 mark. In my opinion, silver is the cheapest commodity out there, in my opinion, or one of the cheapest commodities out there. It's been cheap for a long time. It's still cheap, way too cheap for the times. And at some point, I think we're going to see silver just absolutely explode through the roof. Let's take a look at spot prices today. Again, down a little bit from yesterday. No big deal. Buy the dips if you can. Absolutely do not sell into these down markets. Even if you see a huge down market, do not panic. Buy if you can, or just sit and hold. That's my opinion. Let's take a look. Markets down. Let's look at the ranges. 1838 being the low overnight. Probably European markets this morning, like we looked at. London markets is probably where that was happening. And a high of 1852.99. Looks like we're sitting at 1843 right now. We're range bound. That's fine. It looks like we're sitting in that certain range. And I think we're going to continue to be range bound until the shit hits the fan. And that's the question. When does that happen? Silver, same thing, range bound 25 to 25.50 it looks like. And platinum, ooh boy, it didn't hold on to that 1100 mark. Looks like 1102 is the high and 1066 is the low. That sucks. I bought a bunch of platinum yesterday too. Oh well, happens to the best of us. And well, that's really about it. My prediction, again, we're going to see this kind of trading range, you know, like we've been in for the last couple months now. 18, 1820s, low 18s to the mid-high 1870, that kind of range. And silver has been in that $24 to $26 range for the last couple months too. But again, buy the dips if you can. And not a lot exciting things happening in precious metals market, so just hold. If you see a huge crash in the market, you may stock markets, equity markets, bond markets, and dollar markets, you may see the same thing happen in gold and silver. It'll only be temporary, and it'll be tough to buy physical products, in my opinion, but if you can buy them, if you can't, wait it out, hold, you will be very, very well for doing so. That's just my opinion, and this is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime to ask me for my 30 to 40 years experience doing this on a daily basis, what I think the best product is for gold and silver, or spot prices, or whatever else you may need. Make sure you check out our other videos too. I've got some pretty cool things like how to tell counterfeits, privacy issues, cryptocurrencies, and some other things on our YouTube page. So make sure you check out the other videos and categories on our YouTube page. And make sure you like and subscribe. I'd appreciate that as well. Well, anyway, thanks for watching. Have yourself a great day. If anything crazy happens today, I'll do a second report. If not, I'll talk to you tomorrow. Good day.